Welcome to Daily Crypto, episode 37. Today we're embarking on a fresh deep dive into the incredibly dynamic world of cryptocurrency. Our mission, as always, is to cut through the noise, distill the essential insights, and give you a clear, well-informed picture of what's truly moving the needle. We've pulled together the latest market movements, significant industry shifts, and some, well, truly surprising innovations to extract the most important nuggets of knowledge for you. Okay, let's unpack this.
Yeah, perfect timing for this. The crypto space is constantly evolving, and the current landscape offers a fascinating snapshot of where things stand right now. We're going to explore not just the headline figures and news, but critically the why it matters, providing that broader context and helping you truly connect the dots.
Okay, let's jump straight into the immediate market pulse, and as usual, Bitcoin is leading the charge. It's sitting impressively around $107,491, showing a slight uptick. But what's truly capturing attention, I think, is how it's performing beyond just that specific price point.
What's really telling is that Bitcoin not only climbed above $107,000 this week, but, notably outperformed traditional assets across the board. Think equities, bonds, even commodities. And this happened even as global markets absorbed significant shocks from the Middle East. For you, this isn't just a number. It suggests a maturing resilience, almost like Bitcoin is graduating from a niche tech investment to a legitimate macro hedge. It's becoming harder for traditional analysts to ignore. Its ability to not just hold but climb during a period of global uncertainty is, well, it's quite remarkable for a relatively young asset class.
Yeah, resilience is definitely a headline in itself. But, okay, if Bitcoin is showing such strength, what about the rest of the market? Specifically, Ethereum is trading around $2,437.71. We're seeing reports of crucial risks to Ethereum's price, despite what look like surging ETF inflows. That sounds like a bit of a contradiction, doesn't it? More institutional money coming in, yet risks remain.
It absolutely is a contradiction at first glance, yeah. And it really highlights the market's complexity. The surging ETF inflows, they indeed signal strong institutional demand, which is generally a bullish sign for any asset. However, the underlying risks for Ethereum aren't just vanishing. These could include, ongoing scalability challenges on its mainnet, the persistent high gas fees for transactions, which everyone complains about,
Right.
or the increasing competition from faster, cheaper Layer 2 solutions, and, frankly, alternative blockchains that are aggressively trying to attract developers.
Okay, so a mixed bag then.
Exactly. So while the demand side looks robust because of these ETFs, the core engineering challenges, they're still very much in play. And how they get resolved will likely dictate Ethereum's long-term position and stability. We also see other significant coins like BNB around $648.94, Solana at $151.38, and XRP at $2.19, each with their own minor daily ups and downs. The takeaway here, I think, is that while Bitcoin is acting as the strong anchor, the broader altcoin market is seeing a significant divergence in momentum. It demands a more nuanced understanding from anyone looking beyond just the flagship coin.
That growing split in the market, that's a really critical insight for anyone trying to navigate this space. Now let's zoom out a bit from price action to some of the major industry developments, particularly on the regulatory front. There's been a significant increase in IRS crypto letters. We're talking a spike of over 750%. That sounds less like a friendly notice and more like a warning shot. What does this dramatic increase signify for crypto holders?
Yeah, 750% is, wow. It's a very clear signal that regulatory bodies are intensifying their scrutiny of crypto-related activities, particularly around tax compliance. It's not just a warning, it's an indication of maturing enforcement, really.
So what does that mean for the average person holding some crypto?
Well, for you, it means two things. First, that the era of treating crypto transactions as purely anonymous or, totally unregulated is definitively over, gone. Second, it highlights the increasing importance of meticulous record keeping. Every single transaction, whether you're a long-term holder or an active trader.
You really have to dot your I's and cross your T's now.
Absolutely. The IRS is getting much more sophisticated in identifying these transactions, so preparing for increased tax compliance, maybe even the potential for more rigorous audits, it's no longer optional. It just underscores crypto's growing integration into the traditional financial system.
That's a serious development, something everyone involved needs to be acutely aware of. But moving from regulation to investment, we're still seeing considerable venture capital funding pouring into the crypto space. Kalshi, for instance, secured an impressive $185 million, and Bit Digital pulled in another $150 million. In an environment that can often feel, let's say, volatile, what's this consistent influx of big capital telling us about the future outlook? about long-term confidence.
Well, it's not just general institutional confidence anymore, I think. It suggests a maturing investment thesis among VCs. They seem to be moving past purely speculative token investments. They're increasingly funding foundational infrastructure and, importantly, real-world applications.
Okay, like what?
Well, when we see companies like Kalshi, which is an event-based prediction market attracting $185 million, that signals a belief in more sophisticated, possibly regulated financial products built on blockchain. And Bit Digital, a Bitcoin mining company, securing $150 million. That speaks to continued investment in the picks and shovels of the whole crypto gold rush, right?
Got it, the plumbing.
Exactly. So for you, this means the underlying ecosystem is getting stronger. It's building a more robust, resilient, and perhaps even more regulated foundation for future mainstream adoption, even if individual token prices bounce around. This capital fuels innovation and infrastructure growth. It's building out the backbone of the decentralized future.
That's a great distinction, investing in the infrastructure versus just the tokens themselves. And speaking of shifting narratives, what about the NFT market? That felt like a roller coaster ride for a while there. Reports indicate NFT sales recently reached $125 million, with Ethereum dethroning Polygon in terms of volume. It seems the story around NFTs is constantly changing, often defying expectations. What does Ethereum's resurgence here tell us?
It's a fascinating recalibration, isn't it? Despite previous market corrections and the general cooling of the NFT craze from its absolute peak, the space is still active, still capable of generating substantial volume. Ethereum reclaiming its dominance from Polygon suggests perhaps a renewed interest in its core ecosystem for digital collectibles, especially for higher value art and those established collections.
So the blue chips are sticking with Ethereum.
It might indicate that, yeah. While maybe the more casual, cheaper NFTs found a home on Polygon due to lower fees, serious collectors and high-value projects seem to be gravitating back to Ethereum's perceived security and liquidity. It's a continuous evolution of where value and interests lie within the broader digital asset landscape. It's constantly adapting to new trends and preferences, but maybe with a clear preference for the original blockchain for certain high-stakes use cases.
Fascinating how quickly these trends can shift, and how value seems to consolidate sometimes. Now let's explore how crypto is truly breaking into traditional sectors, moving beyond just being an investment vehicle. We're seeing innovations like EstateX's tokenized twist on real estate, investing everything from rent checks to smart contracts. That sounds like a genuine game changer for property ownership, doesn't it?
It absolutely is, and it's a perfect example of blockchain being applied to real-world assets, or RWAs as they're called. EstateX's approach demonstrates how tokenization can bring unprecedented efficiency, transparency, and critically, more liquidity to a traditionally illiquid and often complex market like real estate.
Right, like owning a fraction of a building used to be really hard.
Exactly. Imagine owning a tiny share of a skyscraper, receiving rent checks directly to your crypto wallet via a smart contract, or being able to sell your portion in minutes instead of months. And if we connect this to the bigger picture, it's part of a broader, accelerating trend. Aptos, for example, also hit a key milestone with RWA on-chain breaking $540 million. It showcases a steady rise in tokenization traction across different blockchains. This is where crypto moves from just abstract digital assets to tangible economic impact. It could really democratize access to traditionally exclusive asset classes.
And it's not just big finance and huge real estate projects benefiting either. We're also seeing how inflation fears are pushing Bolivian small businesses to embrace crypto. This isn't just about investment. This sounds like practical, everyday use, like a survival mechanism in tough economic conditions.
Precisely. This illustrates crypto's potentially profound role as a practical, everyday solution in economies facing significant inflationary pressures, where traditional fiat currencies are just, losing value rapidly. We're talking about real grassroots adoption here. Individuals and small businesses actively seeking alternatives to preserve value, facilitate transactions, or simply survive economically.
Yeah, if your national currency is tanking.
Imagine it depreciating by the hour. Crypto, in these contexts, isn't just some speculative asset, it can be a lifeline. And this raises an important question for all of us. How might these real-world economic pressures accelerate crypto adoption globally, particularly in developing economies, as people seek more stable and efficient financial tools out of sheer necessity?
That's a crucial point. Really highlights crypto's potential beyond just speculation. Now, we absolutely can't talk about crypto without mentioning the wild, often hilarious, and sometimes surprisingly insightful world of meme coins, can we? We're seeing reports that Moonshot has dropped a tool to create meme coins using Apple Pay. That sounds easy. And then there's Memex launching a proof of shed campaign. Yes, you heard that right, to gate 700Ks in rewards as an anti-AI stunt.
What is going on in this unique corner of crypto? It sounds utterly bonkers.
It sounds wild, right? But the sheer creativity and, let's be honest, humor in the meme coin space often reflect deeper trends, believe it or not. Moonshot's Apple Pay integration, for instance, that speaks to an incredible push for accessibility, making crypto creation almost as easy as buying a coffee.
Scary easy, maybe.
Maybe. And then Proof of Shar. It's Memex's provocative way of gamifying human-generated content to combat the flood of AI-generated meme stuff. Users get rewarded for producing original, often irreverent material. It creates a human-centric anti-AI filter, kind of proving that creativity, even in its most absurd forms, can still outperform algorithms in the meme coin space.
Huh. So it's a stunt, but with a point.
It's sort of a playful critique of a very serious underlying trend, and despite the humor, these are real markets. Specific meme coins like Pepe surged by 1.38%, while Bonk and Dog with Hat saw slight dips, ending at a 0.77%, ending at a 0.20% respectively. Shiba Inu is also mentioned as its price size, a potential breakout. So even within this playful niche, there's serious market action and investor interest. They're like cultural barometers for the crypto zeitgeist.
That's a fantastic way to put it, cultural barometers. And on the other end of the spectrum, we have Pi Network. Their price is reported to be stalling, despite a pivot to AI and directory staking. Does this tell us anything about the challenges of integrating new, buzzworthy tech like AI into existing crypto projects? It seems like just adding AI doesn't guarantee success.
No, it definitely doesn't. The situation highlights a critical lesson. Simply adopting buzzworthy tech like AI doesn't guarantee success or market traction. Not at all. The execution, the actual utility, and how it integrates meaningfully into the project's core offering are absolutely key. While AI for crypto prediction and analysis is a big topic of discussion, yeah, it's still being heavily evaluated if it's myth or reality in terms of delivering tangible, sustained benefits.
So the hype isn't enough.
Exactly. The Pi Network example suggests that without a clear, demonstrable value proposition and a robust, active ecosystem that truly leverages that new technology, even innovative tech pivots can fall flat. It raises an important question for you as a listener. How effectively can established projects adapt to new technological trends and turn them into genuine, verifiable benefits for their users and investors, rather than just, marketing hype? The market is getting increasingly savvy at telling the difference.
So wrapping this all up, what does it mean for you, our listener? We've seen Bitcoin showing remarkable resilience, almost acting like a safe haven amidst global market shocks. At the same time, institutional confidence keeps pouring into the broader crypto space through significant VC funding, focusing more on infrastructure now. We've also witnessed tangible real-world applications emerging, from tokenized assets revolutionizing real estate to grassroots adoption in small businesses facing economic distress. And of course, we've glimpsed the quirky, yet sometimes surprisingly insightful world of meme coins reflecting these broader societal and tech trends.
Indeed. The landscape is incredibly dynamic. You've got mature market behaviors happening alongside really experimental innovation pushing the boundaries of what's possible. It just underscores that critical thinking is absolutely essential in navigating this rapidly evolving information space. You really have to look closely. We're observing traditional finance inching closer to crypto, while simultaneously grassroots innovation continues to push boundaries and find new uses for blockchain tech in frankly unexpected corners of the world.
So as you reflect on these insights, maybe consider this. In a world where digital assets can not only outperform traditional markets sometimes, but also offer practical, maybe even life-changing solutions for small businesses in distress, how might our fundamental understanding of value, of ownership, and even of financial stability continue to transform in the coming years? It's something to mull over as you continue your own deep dive into knowledge.